You need to take, you need to protect yourself against this. Every single investor needs to protect themselves against this uncertainty and risk. And that's what risk is, right? Risk is an uncertainty. So I don't know the answer as to when it ends or how it ends. I just know that it is a certainty that it will. Since 1988, I'd been looking for the solution to the Fiat Ponzi. Fast forward to 2016, after two other financial crises that I'd lived through as a trader. One was the first one, LDC, I mentioned. The second one was long-term capital management in 1998. And then the third one, and the biggie, was the 2008 great financial crisis. Okay. Lived as a hedge fund manager through 2008, always knowing the problems with the Fiat Ponzi system, experiencing them regularly with the cyclical insolvency of the financial system, of which the great financial crisis was almost the big one. Like, it was almost over. But knowing that was the problem. And then I I retired from the credit trading business in 2015. And I was going to retire and, spend my life skiing and all the good things in life. And I was introduced to Bitcoin. But like everybody, I'd read in the newspapers, it's the Ponzi. But my aha moment, all right, so long drawn out story. My aha moment for Bitcoin as an engineer was actually watching the Bitcoin blockchain in action. You can watch the transactions that are taking place around the world in Bitcoin, the hashes, the memory pool that's building, that's going to go into building the next blockchain, Bitcoin blockchain. And I'm like, wait a minute. And as an engineer and being visual, and I'm a mechanical engineer, and watching this movement and seeing the beautiful digitization of transactions taking place around the world, where there was no centralized authority that could F things up like all central banks always do. And I'm like, this is real. Oh my God, this thing is beautiful. And I fell in love. And I said, this is the solution to the Fiat Ponzi. I ran through okay, so tell me more. There's only 21 million of these. There's absolute scarcity. There's no centralization. It's immutable. It's based on math and code. I mean, it was my aha moment. And since 2016, I've been convinced that Bitcoin is our way out of the Fiat Ponzi. And I can explain the Fiat Ponzi in more detail because I'm a credit guy. And it's basically just based on debt and the mathematical impossibility of escaping the debt spiral that we are exposed to. It's pure math. You can't argue with mathematics. Math is the base layer of language. Don't fuck with it. You need to hedge yourself against the certainty of fiat debasing, because each successive financial crisis gets more severe, and the solution is to accelerate the printing and the growth of the central bank balance sheets. And so you need to protect yourself against this. Every single investor needs to protect themselves against this uncertainty and risk. And that's what risk is, right? Risk is an uncertainty. So I don't know the answer as to when it ends or how it ends. I just know that it is a certainty that it will end in the way that is very painful to fiat participants. And that's history. Every single fiat has always failed throughout history. We are not going to be any different this time. And why do fiats always fail? Because there's no discipline at the central authority to not print money and to debase your current holdings. At some point, the market is just going to throw up their hands and say, enough of this. That's what happens, right? People say, it cannot continue, and it's better to, not even better. It's a crisis of confidence, and you get a crisis of one participant turns into a crisis of many participants, and then the Ponzi crumbles. So you need to start today, if you haven't already started, protecting yourself against this certainty. The timing is uncertain, but the reality is not. Every fiat always fails. I describe Bitcoin as insurance predominantly to my credit peers, okay, because it means something different. But to the average investor then, and this is why I will refine my pitch a little. Yes, it is insurance if I'm trying to get you off of zero, okay? And that's the biggest challenge for most people is I need to get them off zero. And if I go between 0 and 5%, which is what I try to get them to move to before they go down the rabbit hole, like people inevitably do, like you do, 5% is still an insurance policy, okay? And it's important for them to own that insurance, because if they don't own that insurance, they will suffer the consequences if the inevitable happens, when the inevitable happens, I should say. So for people that have taken the dive down the rabbit hole, like you and I, look, I'm way higher than 5%, but I'm not 100%. I need you to understand that. I don't think you're 100% either. But if I'm 40%, yes, that's higher than the traditional portfolio mix for a traditional investor. But for a credit guy like myself, nah, that's fine. It's still insurance in my mind, but it is not quite as a insurance policy like you'd think of as house insurance. Is that fair? If it hurts, then you might own too much. And that's why, again, like, you shouldn't care if it's 5% of your portfolio and, oh gosh, it's gone down by 20%. So wow, I'm off 1% across my whole portfolio, right? That's not a bad thing. But when you own 80% of it in your portfolio and it goes down 20%, you've lost 16% of your whole portfolio because you're so highly exposed, right? So perhaps sometimes when it hurts too much, maybe that's an indication that maybe you own a bit too much. And that's what's beautiful about Bitcoin, is because my argument to everybody is you don't have to own a lot of it to participate in the asymmetry of the upside opportunity, okay? It can literally still go up, by my math, over 100 times from here. Well, you own 1% of something that goes up 100 times, you've doubled the size of your portfolio with a 1% allocation. My price target is 2 million, and it's in today's dollars, okay, today. So my price target is 2 million in today's dollars, which means if it gets there in 10 years, it's 10 million. In 10 years, because 2 million of today's dollars will be 10 million in 10 years dollars. It's not quite that much of a debasement in currency, but the point is measured in today's dollars. So if it's $1 million in today's dollars, that's your price target. And by the way, Fidelity, which is a very well-respected US money asset manager, is, top 4 in the world, their price target is $1 million by 2030. So we're talking real numbers here, and there is the asymmetry of the upside. So when I say 2 million in today's dollars, yeah, man, that's way higher 10 years from now. An insurance policy with no expiry. There's no counterparty risk. There's no theta, meaning there's no time expiry on this. And that's the beautiful thing about Bitcoin. I like to say, let's talk in 20 years. If my price target is 2 million in today's dollars, and I tell people, don't buy it at 30 because it's going to go to 15,000, but it doesn't, who's the idiot? Because
right.
The upside's 2 million. And you're going to get so fancy that you're going to wait for it to go down by a de minimis amount in terms of the big picture, that you're going to wait, and the chance that it doesn't go to that price target could end up costing you your future. So you don't mess with stuff like that. These are rounding error prices. And I'll put a cherry on top, I hope. I got involved in Bitcoin in 2016, okay? It was under $1,000 a Bitcoin. I bought a bunch, but I honestly believe that Bitcoin is a better investment today at its current trading price than it was when I first got involved in under $1,000. And the simple reason for that is the response to COVID by governments, by global governments, okay? We had that certainty. There was a chance we could have gotten ourselves out of the mess that was produced from the great financial crisis by invoking discipline and paying down the accumulated debts. But now it's impossible that we get out. The response by the governments have painted us into a corner where the certainty of the debt spiral is unquestionable right now. It's only math, Jordan. It's only math, and you cannot mess with the pure mathematics of it. So that's why the investment risk is actually lower now at its current price. I get in trouble with some Bitcoin maxis who say, well, if you're so convinced, why aren't you all in? And there's two answers to that. One, I've never managed risk that way, because while I am certain that fiat will debase, I'm not 100% certain of my price target on Bitcoin. I can't be. But what I can be is enough exposed to that price target that I participate in the upside regardless. My 40% exposure, I'll be just fine if Bitcoin realizes my $2 million price target, right? Come on. I don't care what happens to the rest of my portfolio. Bitcoin will have been the outsized gainer that it should be. So I've never managed risk by being all in on one trade. And then the second part is I don't have to be. That's the beautiful nature of the asymmetry of Bitcoin. And that's how you manage risk, people. All right. You manage probabilities and expected returns, and you invest your scarce resource, which is capital, accordingly.